大家好，欢迎来到 YouTube 大佬透镜，我们用一张 PPT 讲透大佬的深度分析。在开始之前，特别向支持我们的会员朋友们致谢。今天是2025年12月5日，洪浩年终岁末非常忙啊，昨天又走进了彭博的演播室，英文访谈依然干货满满。关于房地产还提出了一个良心建议，真话和良心话只有讲英文的时候才能说，也是他们的无奈。我们直接看要点，美联储政策，无论谁出任下一任美联储主席，都将立即降息并重启资产负债表扩张。2026年市场预期还有数次降息，已被部分黄金、白银、铜、铝等大宗商品价格提前计入。2026年大概率是宽松背景下的再通胀交易，风险资产仍然占优。美元进入长期下行趋势，期间会有技术性反弹，但不改大方向，将继续支撑大宗商品。AI 泡沫，资本支出从自有现金流可覆盖转向大举借债扩张，估值极度泡沫化。本次泡沫规模比2022年更大，不一定是暴跌，有可能是缓慢放气。烧钱最凶的美系超大规模模型未必胜出。中国开源以及资源高效的模型正在快速追赶。中国经济展望，经济成功完成从过度依赖地产向高端制造业驱动的转型，地产短期仍无解，因为库存巨大，负资产家庭众多，但长期会自然出清并逐步消化。建议把房贷利率直接降到0，让居民几年内无需支付利息，释放消费能力，减轻负资产家庭痛苦。人民币升值，人民币实际有效汇率过去几年已累计贬值超过 25%， 2026年将会升至 6.9 或更强的水平。资产配置观点，警惕美股 AI 板块，铜、白银仍处于牛市，黄金2026年上半年继续看涨，港股会跑赢 A 股。好吧，那要点我们就分享这么多，接下来是访谈的完整版，带中文字幕的，大家继续看，万一我们有遗漏或者带有主观偏差的，还可以矫正一下。这里是 YouTube 大佬透镜，我们致力于过滤垃圾信息，挖掘优质内容，感谢您的支持，欢迎订阅、转发，常来。
All right, let's bring in Hao Hong now, managing partner and CIO at Lotus Asset Management. So, I mean, you've got kind of two themes. We can start China, we can start the Fed, but I think if there's sort of a broader narrative that investors are looking at, and I think specifically around this reporting, Kevin Hassett is firming up to be the Fed chair. There's maybe a little bit of concern. Is he going to be someone that's too close to Trump, and you're going to see those market jitters once again?
Well, I think everybody now sees that, whoever going to be the next chairman for the Fed, he is or she is going to cut interest rate immediately and also expand the balance sheet. And this is because, if you look at the repo market in the near term, right, so the repo rate is shooting above the Fed fund rate. So that means that, the repo market liquidity is very, very tight. So whoever gets to be the next chair, he will have to cut interest rate and also start re-expanding the balance sheet immediately.
I guess it's the question then of how far along are we in the easing cycle, because yesterday we were talking about just the number of different projections we're getting from FOMC officials. Essentially, I think it was 11 different projections of where the neutral rate should be in the last time we had that survey back in September. So maybe, okay, yeah, one cut, December is pretty much done, but what about for 2026 then?
Yeah, I think the market is looking for a couple of more cuts in the coming year. I think, if you look at the precious metal prices, it's already, pricing in substantial easing going forward, and also probably monetary inflation. And I think as a result, if you look at especially silver, right? So silver is a cheaper precious metal, right? So it's continued to make new highs, and, people are betting on, aggressive rate cut and Fed balance sheet expansion.
Where do you weigh in then on, essentially, I know the stock market is not the economy, but with the Mag 7, it is a proxy, obviously, and there seems to be a little bit of heat coming out, again, concerns about the AI bubble and, as well, investment going into AIs. We've seen a number of different Fortune 500s concerned about that.
Yeah, I think, before this quarter, the capex that is going into the AI sector is actually still being funded by free cash flow. So I think as a result, I think before this quarter, everything looks okay-ish. But I think getting into this part, where, you're actually extending credit and borrowing money to do your capex, then, there could be a cash flow problem going forward. And also, if you look at the the valuation of the Max 7, right? And many of the related stocks, they look really frothy. So I think, we are getting into a bubbling stage. But I think, at the last stage of the bubble is the part where you get most of the return.
Where are tariffs going to play in the inflation story going into 2026?
I think tariff, on one hand, tariff is going to suppress demand, because price has increased, especially essential items for many of the U.S. Americans. But I think, in general, I think the effect from the import taxes is going to be lifting pricing pressure for the U.S. So I think as a result, as you can see, on one hand, the Fed is bound to cut the interest rate, but then on the other hand, inflation pressure is actually rising, and that is auguring for monetary inflation.
How do you game it out, though? Because I think that obviously there's delayed transmission on that. I mean, right now you've got, for instance, sort of the whole thing just being kicked down the can. You've got the can being kicked down the road. But Trump says he's going to be going to China in April of next year. I mean, maybe that's the point. You actually see some progress.
One should hope so, right? So I think, at the part where the economy is still not in the recession, and also, the price pressure is rising, but not like very substantial pressure on the economy, and then the Fed starts cutting interest rate, this is the part where risky assets actually outperform.
So my next question is kind of pivoting as well into Asia, and that's the situation with the U.S. dollar. We're going to talk about the yuan a little bit later.
That's right.
That is inching stronger slightly
That's
towards the 7 handle. But what's your outlook, given all what's going to happen with the Fed and the interest rate cut environment? What's going to happen with the dollar?
Yeah, I think the dollar is in a secular downtrend. Right? So once the Fed start cutting, once the inflation pressure in the U.S. economy is starting to be felt by almost everyone, then people would start pricing in a further dollar weakness. So it's a multi-year secular downtrend. But then during this downtrend, of course, we're going to see some technical rebound. For example, in recent months, we're actually seeing the U.S. dollar stabilize around 96, and now it's back up to 100 level. So I think you're going to see many of these technical rebounds along the way, but I think overall in the coming years, the U.S. dollar secular downtrend is going to continue.
Can you just go back then, I guess, to your commodities call, and as well how the direction of the dollar plays into that?
Well, a weak dollar would be good news for commodities, obviously.
Exactly,
and so besides the precious metal price I mentioned just now, if you look at copper price, for example, right? So it's going through the roof. Aluminium is going through the roof as well. So I think their strength is going to continue, as long as the expectation for monetary inflation is in place.
But also the expectations of tariffs as well, with the copper story, with a lot of the inventories being brought into the United States ahead of any potential tariff shock, and that's why we're seeing fresh records in copper.
Yeah, I think he's trying to make up his mind, what to do with the copper tariff. He's wavering, but I think even if he hasn't made up his mind on the duty, on the import duty, I think we're at the part of the economic cycle where commodities tend to outperform.
On the AI story as well, because you mentioned that we're getting toward the end of that bubble. What does a deflation of the bubble look like? Are we coming into a burst? Is it going to be a slow deflation? What's the characteristics, do you think?
Yeah, I think all bubble burst at the end. Right? So, we've seen many of these episodes happen. I think even in 2022, right? So when the Fed started raising interest rate, we actually saw the tech bubble deflated by 30%, which is quite substantial. So I think this time around, the bubble is even bigger than before. Everybody is putting in tremendous amount of capital into the sector. I think the market tend to sort of overestimate the impact on AI in the near term, but then on the long term, of course, AI is going to transform the human society.
How does it play out then? I mean, who gets most burnt? Because, for instance, there was the Anthropic CEO speaking overnight at a New York Times event, but saying that they've been a little bit more cautious in their capex and spending really just a fraction of what OpenAI is looking at.
Yeah.
So if you've been a really heavy spender in this environment, are you the one that gets most burnt, or is there something else that you look at?
Yeah, I think people haven't sort of made up their mind. The U.S. model really is that, the hyperscaler, right? So you're just throwing tremendous amount of money on AI, trying to scale up. But then the Chinese way really is, so we're making do with limited technology, limited supply of GPUs, and trying to maximize our output, from these limited resources. So it's a very different model of development. And also, Chinese development is open source. For example, the DeepSeek a couple of days ago, right? So actually released a new LLM that rivals the other.
Two updates.
That's right. So I think it's both sides are making tremendous stride in this area. I think it's two different models. It remains to be seen who gets to lead the world.
Later, we're going to pivot to talk exclusively about China. Later in the show, you're going to stick around. But I did want to ask you about the labor market again, because that's what's fueling increased bets upwards 90%.
That's
that
right.
We're going to get a cut next week, Wednesday, December 10th. But again, it also dovetails nicely with the AI stories. We're seeing these corporates laying off people. Was it Amazon, 15,000 jobs, a number of things.
That's right.
So that's also going to be, as Bell talked about, the bad news led to the good news on the markets, but the bad news is also leading to more bad news, possibly more job losses and more labor market weakness.
Yeah, I think so. As this sort of breakthrough technology continue to develop, right? So as you can see, the lower echelon of the society actually lose out, right? So people keep talking about cave-shaped economy. The economy that is the part of the economy that is dominating is the part that requires lots of capital, right? So because the AI capex is humongous, but then at the same time, as the technology being developed, then we probably need less labor, and therefore many laborious jobs being cut out. So I think as a result, later on, many of these jobs would have to be transformed into the other parts of the society where they find new ways to make a living. For example, these days, we have YouTuber, we have people, KOLs on the internet is making like millions of dollars, and then this is an entirely different lifestyle that cannot be imagined a few years ago.
All right, Hao Hong, stay with us because, as we said, we're going to get more views on China in particular. But that was the managing partner, and CIO of Lotus Asset Management, sticking with us and back with the China market open in just a few minutes.
Still with us is Hao Hong, managing partner and CIO of Lotus Asset Management. Maybe I'll get your comments as well on the property market in just a little bit. But let's pivot again back to the yuan. It looks like the PBOC is sort of tapping the brakes a little bit on the pace of acceleration towards 7. Why would they be doing that when there's been a growing chorus of economists, significant economists, including the chief strategist at CIIC, saying now is a good time? It'll stimulate a little bit of domestic consumption, give more buying power for imports. What's your case?
Well, I think if you look at the real effective exchange rate of the Chinese yuan, it's probably one of the most underappreciated currency in the world. In the sense that in the last couple of years, the real effective exchange rate has depreciated by more than 25%. So depending on which way you look at it. So I think, it could be one of the strategic moves by the Chinese government, trying to grab market share on the high-end manufacturing sector. But I think now, we get to a point where the Chinese manufacturing sector is producing 13 to 15% of the total value add of the global manufacturing industry. And also, the competitive advantage of many of the Chinese industries are probably doesn't have to depend on the cheap currency, to chip away the other countries' advantage. So I think as a result, this is a good time to appreciate the yuan, and with an reappreciation of the Chinese yuan, there should be a revaluation of the Chinese asset price.
Sorry, but how much stronger does it get into next year?
Well past 7.
Oh,
yeah, it should.
What level then?
Yeah, if you look at back in 2018, right? So when there was the first trade war, the Chinese yuan at the start of the trade war was at 690-ish, below 690. Right, so we should go back to that level.
And then you said reappreciation of asset prices. Which assets are you looking at in particular?
Yeah, I think in general the Chinese stocks tend to be a good play. When the Chinese yuan appreciate, there's a close relationship, with a stronger Chinese yuan and a stronger Hong Kong market and the Asian market, in particular the Hong Kong market. I think also, because China is still a large importer of global commodities, and that will all go well for commodity price as well.
We're going to get to Tristan in just a minute to talk about the property market. But again, the overarching rhetorical question is where is and when are we going to see the bottom to the market? It doesn't look like we're going to see it given, the troubles at New World, the Country Garden, Vanke, and others.
Yeah, I think, in particular, Vanke has been in a bit of trouble, right? So they're probably going to delay the payment. But if you look at what happened in the past couple of years, Right, so on one hand, the Chinese property market continued to decline, but then at the same time, the Chinese economic growth maintains sort of steady as she goes, right, for the past couple of years. So what that means is that the Chinese economy has been undergoing a transition in the last couple of years, from a overly dependent, property-dependent model into a new sort of high-tech manufacturing-driven model. And it is showing results. Otherwise, how could you explain, on one hand, the property-related data is so ugly, but then at the same time, the economy seems to be doing fine.
Yeah, questions actually over the withholding of certain property data as well. And
That's right. Yeah, that doesn't help confidence.
Yeah, probably not.
Yeah, but I think the investors can still pay to get access to it. Yeah.
Morgan Stanley, I'm curious then for your view, if you're saying that, I mean, just in general, that appetite for property. He had a roundtable conversation this week over in mainland China, and Robin Xing, that is the bank's chief China economist, but talking about this need maybe for mortgage aid and for China actually to turn to mortgage subsidies to try and prop up the market. I mean, is that a good policy move? Would you recommend a policy move like that?
Yeah, I think it would be a good policy move. I think they should just cut mortgage rate to zero. So people don't have to pay for interest payment, and then they just live in the house for free for a few years. Wait until the market bounce back. I think that way, on one hand, you lessen the burden of people's repayment of mortgage, and then on the other hand, you free up all this money to do other things. And I think everybody knows that by the time when it gets to 2020, 2021, the property price has peaked, and I think we're now 30% down from the peak. I still think that there will be further correction to go, but during this correction, how do you minimize? How do you sort of lessen the pain for people who bought at the peak? Is that you free up the mortgage payment for those people, and then let them free up the money to do other things.
I saw a statistic. I can't recall the number right now, but the number of households in China right now that are in negative equity, it's just hard to climb out from. We've seen that in Hong Kong in the down cycles as well. I mean, it's vicious as well. So it's a very difficult one to get out of. But I also, sort of adjacent story is the input cost for the property market. Can you guys bring back up the copper prices that are now the futures, the SFE on the copper? The numbers stood out to me because we did see the global rally in copper overnight to record levels, but up again another 2%. So we are seeing in Shanghai, the Shanghai futures. Well. So you're seeing, that's an input cost to property as well, isn't it?
Yes. Property tend to be very sort of resource intensive, right, and then capital intensive too. I think despite much efforts trying to rescue the sector, there's still a substantial overhang that is ongoing in the market, and also many of these developers who are now in trouble, they still have thousands of projects being built in the market. So I think in the near term, it's difficult to see an immediate solution to the sector. But then I think over the long term, things would get drawn out, interest rate would be cut, debt would be restructured, and many of the commercial banks may have to shelter, the cost of restructuring.
You mentioned earlier about how Hong Kong stocks in particular can benefit from that yuan appreciation. And another factor, of course, is the Fed easing, again, that plays into the conversation. For your preference around A or H shares then for next year, what do you pick?
I think I will just buy them both. Okay. Well, look, this year the Hong Kong market rallied substantially, right? So there's the premium of A share to H share actually lessened this year to a historic low. So I think if history is a guide, then A share should do better than H share in the next year. But then at the same time, because A share is doing well, and also because we're going to see some earnings recovery, and also strong policy support for the economy because it's the first year of the 5-year plan, then Hong Kong, as a benchmark, shouldn't be doing too poorly either.
Mm-hmm. All right, so we're already into December, so I guess I can have you put on your prognostication cap. What's going to be the dominant theme that we're going to be talking about through 2026 when it comes to the China market? I mean, with Central Economic Work Conference is going to be meeting. We're going to have the NPC to set sort of, kind of reconfirm what they've already done behind closed doors, and that's the next 5-year plan. So what's going to be 2026 dominant theme other than geopolitics as they kind of constantly remanage?
Simmering in the background.
Yeah.
Well, I think, one of the dominant themes is that the technology development is going into a accelerated pace. So I think next year we're going to see a lot more stuff going on, breakthroughs in semiconductor sector, AI, large language model and all that, and robotic movements, for example. And then at the same time, we're going to hear a lot more on Chinese consumption. Right? So there will be policies, trying to help Chinese consumers to consume more, spend their money, more social security reform, that kind of stuff. And then I think lastly, we're probably going to talk about more on, how best to resolve the property situation, because it's a situation that has been going on for years.
Because more consumption doesn't mean buying property.
No, buying stocks maybe.
Then, just on that tech story as well, what is the theme then that you watch in particular? Because I think that Chinese tech companies you've obviously got those e-commerce wars that are ongoing, affecting some of them. But the other story as well is around low monetization rates for the cloud companies like Alibaba on that side. Is it more the story that you watch with increasing adoption and driving better profit margins, for instance? What is the actual tech theme?
I think many of the companies are still spending a lot of money, right? So, but if you look at the development of Alibaba, right? So recently it has made a lot of breakthrough in AI, and also it's already the second largest cloud computing company in the world. Many people didn't know that, and so I think next year, just now you mentioned that China is going to stop using the H100, H200 chips, with the GPUs,
if they're allowed to buy them.
And the Chinese government is very determined to build its own chip. I think it's making some progress, not yet catching up the U.S. pace, but there are progresses that is being made in China. I think next year is going to accelerate, because there will be a lot more capex going into this sector, and that's why if you look at the semiconductor companies, they're doing exceedingly well this year.
Yeah, and I think one of the things that China has as well is really a finger in many parts of the semiconductor ecosystem as well, from the designers, foundries, material suppliers. Yeah. All right, Hao Hong, thank you very much for joining us this morning. That was Hao Hong there, Managing Partner and CIO of Lotus Asset Management.